Now, a new report from Byte Mobile shows that video now accounts for at least half of all data transferred on mobile networks, up 10% from last year. For more on the increasing burden on our existing network infrastructure, let's bring in Paul Kedrosky, longtime tech investor and entrepreneur, also a Bloomberg contributing editor and author of the blog Infectious Greed. So, Paul, what is your take on all of this stuff happening at the same time?
Well, these are all really different, different sides of the same problem. I mean, these mergers and acquisitions that have been going on, what's happening with respect to some breakups of some potential acquisitions, writing down some historical investments, and then this data showing that, something like 50% of all mobile traffic is now video related, up from something like 35 or 40% barely a year ago. And so all of this is sort of this grand transfer of bits going from landline networks over to, well, backbone networks, but also to wireless. And as that happens, all the carriers and the service providers look around and say two things. One, I have to build out some really, really fat pipes to handle all this traffic. That's going to cost me a lot of money. So for me to be able to afford to do this, I need to be big, and I need to be big now. So you create this immense pressure for both the CapEx and also to get bigger as a company, and usually that happens through M&A. So everyone's looking around to see, who are going to be the last people standing? Who do I want to be combined with? And now that we've elected which technologies are likely to be the core ones carrying all that mobile video, LTE in particular, if I have an investment in anything else, WiMAX being a great example, I'm going to write that down and move on because it's just not a player going forward.
Paul, how long can we keep consuming data at the rate that we are, video at the rate that we are, and at a rate that will surely increase?
You know what? It's this phase, this sort of build out on the mobile side is still in its relative very, very early days. Today, give or take, the total mobile video traffic right now is approximately on par with the total internet traffic circa 2001, 2002. So, if you sort of took that traffic from then and brought it up today, that's roughly what we're carrying in terms of video. My expectation is we'll probably do 2 or 3 times current traffic on wireline will be happening on wireless within 6 or 7 years, which would be something like a 12-fold increase in traffic over the next 5 years. I mean, we're going to see remarkable growth, and we're just at the inflection point as people say, oh, look, I can do streaming video credibly. It's not just archival video and the odd YouTube clip.
And the video quality is getting better, which certainly helps. Who's benefiting from all this data use, and who's getting crushed here?
Well, I mean, I joked about this, I think, last week or a couple of weeks ago when I was on, that to some degree, you can think about Apple as being, a giant wealth transfer from AT&T shareholders to Apple shareholders. So there's one of your primary beneficiaries are the people, like Apple specifically selling appliances, and the appliances predicated on consuming all these bits. So that's one, and that's at a high level. App providers, of course, like Zynga, are another beneficiary of all of this. But if you go right down into the bits and the feeds and speeds of the network, it is people like Cisco, or maybe even more specifically or more appropriately, companies like F5, who are really in the business of traffic shaping on wireless networks. I saw F5 made an acquisition today, 150 million Traffics Networks, which was right aimed at the center of this problem, which is shaping traffic over wireless networks so that all of us consuming all of these bits don't squeeze out everybody else trying to get email, which is going to be a huge problem going forward. So those are the big winners, and the carriers, quite honestly, are the big losers, because it's going to be a giant wealth transfer from them to everybody else.
Big winners and big losers. Paul. Now, let's bring our Paul Kedrosky back into the conversation for more on this dispute. Paul, what's your take on this? Is this a serious threat to Apple and the iPad name?
Yes. No, I'm just kidding. No, it's, hopeless stuff. This is, like up there with patent troll behavior. So, it is a case of use it or lose it with respect to trademarks, and this is a trademark that has not been used for some time. Second, it's a suit that's already failed at a couple of levels in China, so being brought over to the U.S. is really jurisdiction shopping, which is a classic sign of an exhausted plaintiff here. Third, it should not be a surprise that when Apple approaches a potential licensee about a trademark, it doesn't say, hello, my name is Steve Jobs. You might have heard of my company, Apple. We have this blockbuster product, and we're just wondering if for one of the largest markets in the world, you'd cut us a really cheap deal for the trademark. That would be stupid. So what they typically do, and this is the same whether you're buying a domain or trademarking a product, is you go in through second party, third parties under different names so that you can do the deal in a way that isn't biased by being what is currently now the largest company in the world with some of the hottest products. And to suggest they should do anything else is just lunacy.
We'll see how far this goes. I also want to ask you about this acquisition of Chomp, very characteristic of Apple to make these very small acquisitions. At the shareholder meeting yesterday, a lot of talk about how Apple is going to spend its $100 billion cash pile, and acquisitions, of course, come up. Do you think that Apple will really make an acquisition that seriously, takes a serious dent out of its cash pile, or is that just not in Apple's nature?
It's not in their nature, it's not in their genetics, and it's not in the financials of the market. It's just so difficult to imagine how they could even spend half of that cash pile on a synergistic, on a non-dilutive synergistic acquisition for the company that wasn't anything other than a sop to shareholders, and so they would never do it. So my guess is, based on the comments that came out of the shareholder meeting yesterday, which showed an Apple that's as tail-waggingly friendly to shareholders as I have ever seen, you're going to see a sizable dividend and possibly some kind of stock buyback, and a significant decline in the cash holdings of the company, and that's all good for shareholders. But I just don't see it happening in the form of some massive acquisition or even a series of them. It's more likely to be a series of small acquisitions and then some big changes with respect to dividends and/or stock buybacks.
Interesting, though, Apple hasn't done a dividend since 1995. I do want to ask you quickly, some interesting data from the U.S. IPO index has really rebounded, more so than even the S&P, which has really been right on a roll. How much are the technology IPOs that have happened in recent months contributing to this?
Yeah, I mean, that's the story, isn't it? I mean, something like double, when I looked at the number, I think 17.2% year-to-date for the IPO index versus something like 8 and change for the S&P 500. And the story is very much about technology. And this is, keep in mind, is aftermarket performance of the IPOs. This isn't taking into account first-day pops or whatever happens. This is aftermarket performance. So what this is telling you, in particular about technology, is that the companies that are coming public have real businesses in the sense that investors are willing to stay with them and aren't just buying them, flipping them, and running for the hills. And that's, I think, a suggestion that this is pretty interesting time for tech stocks, and it's the first time this has happened in terms of a beginning of a year. I look back to the early part of the decade, we never even had these kinds of numbers in 2000. So.
And it's going to get even more interesting when Facebook goes public later this year. Paul Kedrosky.
Right.
Yes, them. Those guys. Thanks so much, Paul, our Bloomberg contributor, editor of the blog Infectious Greed.